What is the real estate market going to do in the US in the next couple of years? Well, guess what? I actually do have a crystal ball. And I'm going to tell you what it is telling me. Home prices and sale volume are going to be very choppy all across the US, with some specific markets holding fairly stable and other areas dropping by another 15 or maybe even up to 30% from the peak of May 2022, when interest rates started to dramatically rise. All areas of the country are different, and even within cities and specific zip codes, we have huge variations of supply and demand and even desperation. Now, that doesn't take a crystal ball or even a rocket surgeon to actually tell you what's going to happen. It does take data, and we have lots of information about what's driving real estate supply and demand. We're going to dig into some graphs and charts in just a moment, but first, would you please hit that like button and subscribe, and also leave us a comment down below about what the market is doing in your area. Thanks. We love to see what's happening in real time from real people. If you don't know already, I am Douglas Lucky Larson on the Retire Early and Often channel. And as you might know, my channel is all about retiring early and often. And that means that whatever stage of life you're in, you can and must incorporate more early retirement components into your life. Many people spend their whole life sacrificing their relationships, their health, their sanity, their balance, and creativity in order to get ahead. They think that they need to build a huge and elusive nest egg that will somehow buy their freedom and fulfillment back someday. But that's just not how it works in real life. If you do the right things now, then you will always be happy and fulfilled. And because a little extra money in the bank never hurts, we also talk to you about how to make passive income, especially in real estate. So, what do the numbers and trackable trends actually say about real estate over the next couple of years in the United States? Well, we can go back 50 years or 70 years or 100 years and find a very compelling trend line. Home prices in nominal dollar terms, or even inflation adjusted terms, never stray too far from a gentle upward sloping line. The only reason why we have a gentle and constant upward sloping line is and not a flat one, it's because of the devaluation of our currency over time. We call it inflation, but it's your currency, your dollar notes, getting smaller. They buy less and less. The Federal Reserve and all the politicians in Washington seem to be on board with this scheme of continually devaluing your currency. Now, why would that be? Well, partly because it helps them to be able to pay off their debt with future, cheaper dollars. Well, what else does it do? Well, it keeps people spending money, and that really does help the economy. I mean, think about it. Most of us are a little better off than our parents and our grandparents. When money circulates quickly, it helps the economy to grow, and that's a good thing. But people in the lower classes, they get hurt really bad by inflation, and we've seen that a lot over the last several months. Now, if you think we're going to see anything different than what we've been seeing, you're probably wrong. Now, are there some outliers, black swan events, apocalyptic scenarios that could take home prices to zero or to infinity and beyond? Of course, a nuclear war with China or Russia, or a pandemic far worse than the one that we've just had, or a woke versus MAGA all-out civil war in the US. Sure, any of these could make the trends and charts and graphs completely irrelevant. How about surging unemployment or government overreaction to something like that, and then infinite money printing? Well, that could lead to hyperinflation. Yeah, any of the market indicators that we're going to look at would fly right out the window. All we can do, however, is deal with what's in front of us and most likely to happen, and then hedge ourselves just a little bit in case something really catastrophic does happen. I did a video last month, and I'll put a link in the bottom here in the description about don't buy gold unless you've done these things first. That video is a possible guide for being a little more prepared for really bad things that could happen. I also believe that it's crucial to stay positive because guess what? Optimistic people live happier and more fulfilled lives. They get stuff done, while the pessimists never seem to accomplish anything except spreading more fear. So, what does the market trend and historical information look like, and what is it telling us about real estate prices? Well, you see these trend lines that I've put here, and you can see nominal home prices, that's in blue, and then CPA adjusted home prices. They show that basically prices shoot up above this trend line when there is cheap and easy money combined with a bit of FOMO and irrational exuberance, and then prices hit a ceiling and they come back down over the space of a couple of years, dropping below the trend line for a while before bouncing off the bottom and coming back up. Now, this chart shows median home prices again in nominal terms and then in inflation adjusted terms in the green. We noticed the same kind of price volatility during the pandemic, for instance, on a micro scale with things like home furnishings and office supplies and laptop computers, where demand went way up in 2020 when kids and grown-ups couldn't go to school or the office. They couldn't spend money on certain items. But they needed to buy things in a hurry to, make their home a more comfortable place, or buy things for their kids to be able to use, computers and things. Well, but now that things have calmed down, kids are back in school, people are going back to the office, or at least they have the laptop computer that they're going to need if they're staying home. Well, guess what? You can buy big screen TVs and Chromebooks and all kinds of things for 50 to 80% off what you would have paid in, say, August of 2020. How about a Peloton bike, the deluxe model, which sold for $3,000 when everyone was locked at home and you couldn't go to the gym? Well, guess what? Now you can pick up that Peloton bike, only slightly used, and it's about half price. Now, that kind of supply and demand imbalance, that seesaw price volatility, it plays out in all markets, real estate, stocks, whatever. Whatever goes up must come down. And this kind of trend line that I've got here represents the U.S. housing. And of course, some areas will stay pretty close to the trend without massive up and down swings. But other areas like Vegas, like Phoenix, most of California, Boise, Salt Lake City over this last year, Austin, Texas, Atlanta, even Miami. All these places are going to react very differently than, Indianapolis. Other places like that are pretty even keel. Now, we haven't even discussed some trends like retiring baby boomers in droves and the rise of digital nomads and millennials and Gen Z just now wanting to embrace family formation and home buying years. Not to mention about 5 million new people coming into the country by immigration and not by birth over the last couple of years. Now, you can put a brand new baby in a crib and have them share a room with a sibling, but new grown-ups coming into the country in record numbers, guess what? They require more houses right now, and townhomes and condos and apartments. Anecdotally, I have several rentals in the Salt Lake City area of Utah and a couple rentals in San Diego. I'm originally from San Diego, and we have always had a lot of Spanish speakers down there. In Salt Lake, however, recently, more than half of my applicants on 3 different rentals that I needed to fill over the last 6 months were from Latin America. I speak a little bit of Spanish, un poquito. But it was interesting that a couple of the groups barely spoke any English. 2 groups that came through were both from Venezuela, and their first question was, so how many people can live here? Now, that is a trend I think we're going to keep seeing much more of. Now, hey, before you leave a comment talking about who should or should not be in this country, that is not what this video is about. You can go rant about that somewhere else. I can tell you that there's no place that I would rather be than in the good old USA. And if I was living in a crazy drug cartel, dictator run country somewhere in the world, well, I'd be making my way to the US for sure. And you probably would too. Now back to the data. You can pull up a trend line for just about any city you're interested in, or go to the stats at Redfin. If you pick almost any house and go way down to the bottom of where that house listing is, you'll see a trend over the last 3 or even 5 years, whatever you choose, and it'll tell you about that zip code, that neighborhood, or Realtor.com, or even Zillow. And you can see historical price and volume trend lines for even specific zip codes. If you draw a sloping curve right up through the middle of the peaks and the valleys like I've done here, a trending line that shaves off the highs and the lows, well, you can guess where prices want to be. They don't want to go too much higher because they bounce up that ceiling, come back down. They don't want to go too low, they come back to that trend line. Now, unless there is a huge government stimulus effort or some other radical intervention or black swan, home prices on average should see a decline of another 15 or maybe up to 20% in some areas, and at least 5 to 10% below this trend line if you look here close. So we're up here where this dot is, and I think that this is going to come down like this over the next couple years and then come back up. How far below the trend line is it going to go? I don't know. Even though I pretend to have a crystal ball, I really don't know. But history has said that this is what it will do. And again, if you think it's going to do anything differently, you haven't been paying attention. Now, in areas like San Diego or Salt Lake City or Northeast Florida, I love those markets and I see huge price drops at the high end. But the lowest end of the market really hasn't gone down that much from the peak of May of 2022. Sellers just aren't that desperate, and buyer demand is still there, putting a floor under the pricing. Look closely at this green line for inflation-adjusted house prices, and all the times, at least 5 different times in over its history, since the 1950s, it's gone above and then below this trend line. It started to do this even much more dramatically after we went off the gold standard right about here, early 1970s. That's very interesting, don't you think? I think in the next couple of years we will see a drop back below the trend line, and then it'll snap back up just like it always does. But we are going to see some home prices continue to come down. Now, another good indicator of where house prices are going in the United States is to look at the median home price over the top of the U.S. stock market. Now, there's a pretty close correlation, especially over the last 25 years. So if you look at this graph up here on top, I didn't draw any trend lines like I did on the bottom, but on this one on the top, you can see they don't differentiate too far in either direction. Not if you balance out those curves. So the red line is the S&P 500. That's a pretty good indicator of the stock market. And then the black line, that's real estate. The Case-Shiller Home Price Index. Now, you can see that if this trend continues and stock prices continue to drop, not in a straight line, but more like what they always do, come way out over here, and I would imagine that we're going to see this stock prices go down about like that. And what that's going to do is it's going to lead home prices down a little bit lower, as it usually does. Look at this one right here. This one here was a little pause right at the beginning of COVID. And home prices did pause. They actually went down in some areas, and only the desperate people were willing to lower their prices, but there were some good deals to be had. Trust me. Anyway, if stock prices continue to go down in this zigzag line over the next 8 to 12 months, home prices will follow. Again, I'm not thinking there's going to be a huge crash, but it's going to make for some more good buying opportunities. Now, that's what I get asked all the time. Should I buy a house right now? Well, disclaimer, I am not your financial advisor, so I can't give you advice, but I do hopefully provide some useful infotainment to help you make the best choice. So, should you buy a house? Please start by answering these questions for yourself. Do you need to or really want to buy a house, a condo, or a townhome? Will home ownership give you something that renting, or your current situation, whatever that is, maybe you're living in your parents' basement, will home ownership give you something that your current situation does not? Maybe it'll give you tax breaks, or more privacy, or independence, or proximity to work or school. Another question, can you withstand a possible 20% price correction even from where we are now? And that might happen over the next year or two. And can you stomach that? Another question, can you find a good option for a home and a loan in your area and for your circumstances? Available inventory is still not awesome in most areas. It's coming up in Phoenix and Boise and even a little bit here in Salt Lake City. And, I'm watching it in San Diego really close, where I like to spend a lot of time, and also in Florida. I'll be there next week. Yeah, we're seeing some inventory creep up in some of those areas, but it's not just crazy. In most of those areas, it might be getting back toward a 2019 level, but it's nothing like 2011 when prices were down in the toilet and available inventory was triple what it is right now. Another question, can you find something at 2019 pricing or just great terms like seller financing, or maybe you can assume somebody else's mortgage or a lease with option to purchase? Can you house hack and do better than your current situation? Another question, can you hold for the next at least 3 to maybe as many as 5 years without needing to sell? You do not want to be a desperate seller. That's what brings prices down. And you don't want that money coming out of your pocket. Now, I know this is going to sound boring, but all the really old, wealthy guys I know, they own real estate, and they've owned it for a while. When we buy and then hold on to properties for years and years and years, we just collect rent all along the way. And we don't worry about what the market says that the price tag should be at any given moment. Yes, I watch the market, and I'm making this video, aren't I? But we don't sit there every second of every day watching our real estate like people watching Bitcoin, right? No. We don't try to time the market perfectly. It's more about time in the market over time. Now, these kinds of investors, they refinance or sell or exchange properties when it's right for them. And in the meantime, they just, again, collect rent checks every single month. If they own their own home, they bought it when it made sense to them, and they stay there a long time. It's very difficult to consistently do real estate like day trading stocks. It might work in a frenzy like we had in the last 2 years from, say, summer 2020 until May of 2022, but that's a risky business. It's tough to do consistently. Most of the YouTubers talking about huge price crashes and the end of real estate are not the people who buy and hold real estate. They either make money by being negative Nellies all the time, or they're just data nerds who never pull the trigger on anything. Now, there's always a good deal somewhere, but maybe not for you right now. Trust me though, I've been a real estate investor for almost 24 years in 3 different states and 5 very different markets. Now, if you are constantly looking for opportunities, you will find them. Here are a couple of real life situations that might help you. I had some good tenants who just bought a house here in 2023. They moved out of a place that I had here in South Salt Lake and found a place that met their needs at a good price. And they had a great VA loan, and they were able to buy down the interest rate so that the monthly payments were less than what they were paying me for rent. That made sense. I know a baby boomer who is a computer systems analyst consultant, and he can work from anywhere. He purchased a nice home in sunny Florida. It's got a pool and it's a nice place. Now it's got a 7% mortgage, but it's got a price and a payment much lower than what he was paying in cold and snowy Utah. It made great sense for him and for his needs. And he plans to refinance in the next year or two as rates are likely to come down. I've got a nephew right now looking to buy a 3-bedroom townhome. And if he rents out 2 of the bedrooms, he can live almost free. Now, I have made 4 offers on properties in the last few days. 2 in Florida, 1 in Southern California, and 1 here in Utah. I'm not sure I'm going to get any of these offers accepted, but I'm making offers that make sense for my situation. I don't need to buy. And so if it doesn't make sense, I won't buy. And you need to make the best decision for you. Don't listen to anybody trying to tell you that it's a horrible time to buy. You know, unless they're buying the house for you, what does their opinion have to do with what you need or want or can afford? Do any of these situations resonate with you? I'd love to hear your comments down below. To summarize, will the overall U.S. housing market go down? I think over the next 2 years, we will see price declines in most areas. But spring and summer are usually going to see more demand, and fall and winter months tend to see better pricing. I think the worst it will get in some overbought markets will be maybe 20 or maybe even a 30% drop from the highest prices that we saw last May. Most of those price drops will be in the upper priced homes. So a $1.2 million home might sell for $850. Woohoo, awesome deal. But affordable homes in most markets might drop 5 or 10% from here. But they're probably going to hold their value pretty well, especially if job losses don't get too bad and rents stay stable as they appear to be doing right now. Again, I cannot give you advice, but I can tell you that if it makes sense for you to buy a house or a townhome or a condo, then for goodness sakes, I would be looking right now. Make offers right now, as long as the offers make sense. All right. As always, thanks for watching. Please share this video and my channel because we love being able to help more people. And give us a thumbs up. And I hope to see you again on the next one.